Well, what can transpire next in the market? Thank you so much for the kind of response you guys have given me for my last video. Really sweet and very kind of you. Let's understand the markets, which were at 12,200 levels, which was really high, in March, started correcting downwards. That was the first leg of the correction, and it came right down till 7,500, where it touched it twice. That was the level from where the market again started going up in April, which was the second leg of the move in the market, which took it right back to 9,800 levels in April itself. Now is the third leg of the market correction. The Nifty, which is around 9,800, around in April, has now again come down to 9,200, 9,300 levels. I'm going to stick my neck out. I'm going to be stating that, there could be a chance that the market is going to go right low and test the 7,500 levels again, maybe go a little bit lower from there. But if you ask me, the past history tells us that this is the right time to go ahead and invest. This is the time when you should start allocating your money into the equity market slowly and gradually over the next 3 to 6 months, and then wait it out. You should have 5 to 7 years a period time frame going forward to invest in this correction which is taking place now. What is the reason? A few of it has been shared in the last video. The Nifty 50 or the large caps are available at a 2016 valuations, which was way back 4 years back. The mid caps are as low as they were in 2015, which is 5 years back, and the small caps are at 2011 levels, which is 9 years back. So it's like historic lows. So you're going to go ahead and invest your money in index levels which were way back in what they were in 2016, 15, and 2011. So that's one. Second, you need to be a little optimistic. You need to understand that the crude has really come down. It's close to $24 a barrel. It's very good for the Indian economy and the current account deficit of India. Historically, they were at around $60 a barrel. Then you have the supply chain disruptions which are taking place in China. What this means is, many of the countries in the world would now want to shift their manufacturing base out of China, and India could be one of the beneficiaries of the same. Then there is also a lot of monetary and fiscal, stimulus packages which are coming our way to support the economy during this turmoil, which was very similar what was done in 2008 and 2001. So that's the other bit. And all these instances, once such huge crashes took place in the past, the markets really rallied very well, in the next few years. So that is the kind of assumption you need to take and move forward with. It's obvious the thumb rule is you should invest your money when the markets are down. They are down right now, and then you should wait for the markets to move up. When you take this kind of a simple rule of investment, this is the right time. And obviously, I have given you the data, which should actually give you some kind of conviction for the same. Uh, Please go ahead, start investing slowly and steadily. Keep 5 to 7 years in mind. If you've already invested, use this opportunity to average your investments. If you have not started, I personally believe this is a good time to do that. At least the history tells us so. That's from my side. At Smith Talks, our main idea is to impart knowledge, discipline to all of you, which we do all the time. And feel free to ask us any questions. We have comment sections. You can help us out and ask us questions. We can answer for you. All the very best. Stay safe. That's a wish from our side. Thank you so much.